the top 5 best investments, especially if you are retiring in the next 5 years in Kenya. Because if you're planning to retire in the next 5 years, your investment strategy must be very different. It must change, and it must be geared or structured towards something else as compared to someone who has got 10 years or 15 years into retirement. Because at this stage, the goal is no longer aggressive wealth building. The goal changes and it becomes something far more important: protecting the wealth that you've already built while ensuring that it produces constant and guaranteed income for you during retirement. And this is where most people make dangerous mistake. After working for 30 to 40 years, they suddenly make risky investment decision right before retirement. And they start investing in speculative land. They chase high return schemes, or they move large amounts of money into investments that they do not fully understand. And when those investments fail, what happens? They lose financial security at the exact moment that they need it the most. So this video, I want to walk you through the 5 best investments if you are retiring the next 5 years. And these are not random suggestions. They are based on 3 important principles. Principle number 1, capital preservation. We have to preserve your capital when you're just 5 years into retirement. Number 2, consistent income generation. You will soon retire, and so you need something that replaces your salary on a monthly basis. Then number 3, historical performance. So before, how has it been performing historically? So before we talk about this investment, I want to talk about the mistakes that many people make right before retirement, so that if you can avoid these mistakes and then take advantage of the investment that we shall talk about, you'll be on a right path towards proper retirement planning. Because just avoiding these mistakes alone will be as important as choosing the right investment. So mistake number 1, taking too much risk. Many people panic when they realize that retirement is approaching. They suddenly try to catch up financially by chasing high risk opportunities. You hear a company giving you 30%, 40%, and you run to invest there, taking too much risk. But high risk investments close to retirement time age period can destroy decades of savings. Just imagine you've worked for 30 years and then you get a scam that takes away your 5 million. You start from square one. So at this stage of life, protecting your capital is more important than chasing maximum returns. I'll repeat. Protecting your capital just 5 years into retirement is more important than chasing high returns. Mistake number 2, investing without understanding cash flow. I always say that retirement is about cash flow. Some investments will look attractive on paper, but generate little or no income at all. For example, idle land somewhere. And for retirees, income is critical. Cash flow is essential. You need investment that produce regular cash flow, not just long-term appreciation. Mistake number 3, ignoring inflation. Inflation quietly erodes the purchasing power of your money. And in Kenya currently, inflation has averaged roughly between 5% to 7% annually over the past decade. This means that the money that you've stashed somewhere is slowly losing its value, and your retirement investment must grow faster than inflation rate. Mistake number 4, lack of diversification. Putting all your retirement savings into one asset class is very dangerous. And I always say that a strong retirement portfolio spreads the risk across multiple types of investing. Put some money in bonds, put some money in money market, put some money in business, so that you diversify your risk. Now, with those principles in mind, the 4, let's look at the 5 investments that have historically performed well for people approaching retirement in Kenya. Investment number 1. And these ones are not in any order. I'm just sharing them according to how I've listed them. So there's no particular order to show that which one is the best. Investment number 1, Treasury Bonds. And bonds remain one of the most reliable retirement investments in Kenya because they are issued by the government through CBK and they are considered low risk investment. And remember, we've talked about the principle that you've talked about. Low risk has been one of those. And in recent years, many people who have invested in bonds, they have gotten yields averaging between 11% to 15% annually, depending on the bond's maturity and the bond type. And this makes them very attractive for retirees because they offer capital preservation. Your money is not lost. Secondly, they offer predictable income. And then thirdly, they have got higher returns than traditional savings account. So investment number 2, money market funds. During retirement time or just towards your retirement time, liquidity is a very important factor that you have to consider. And money market funds have become increasingly popular among the Kenyan investors because of the liquidity aspect. Over the past few years, money market funds have averaged between 9% to something between 11% to 12% annually. And their popularity comes from 3 key advantages. Advantage number 1 is liquidity. You can typically access your money within a few days. Advantage number 2, low volatility. Money market funds aim to preserve capital while generating steady returns. And advantage number 3, professionally managed. Fund managers will actively manage your portfolio to maintain stability and optimize returns. So for retirees who are about to retire in 5 years, money market funds will provide flexibility and income stability. Investment number 3, dividend-paying stocks. It's important for you to note that while stocks can be volatile because they're controlled by the market, certain companies on the NSE have long history of paying consistent dividends. And the examples in the sectors such as banking, telecommunication, energy, some of these companies have historically delivered yields between 7% to 8% to around 10% on an annual basis. Now, dividend stocks are very attractive for retirees for 3 various reasons, several reasons. Reason number 1, regular income. Dividends will provide cash payouts without selling you your shares. Number 2, potential capital appreciation. And number 3, inflation protection. However, it's worth noting that while dividend stocks are good, they should be chosen carefully and ideally diversified across several companies. Investment number 4, rental and real estate income. Real estate is not a new investment strategy vehicle. It remains one of the most popular retirement investments in Kenya. And rental property can provide steady monthly income, which is extremely valuable after retirement because it's guaranteed. And so, depending on factors such as location, property type, rental yields in Kenya has typically averaged between 6% to something to 10% on an annual basis. Now, real estate offers 3 important retirement advantages. Advantage number 1, consistent income. Advantage number 2, asset appreciation. And advantage number 3, inflation protection. Because as inflation rises, rental income often increases as well. Because if you're a rental owner, you can just increase your rent by a small percentage, and that will cushion you over inflation. However, it's worth noting that successful property investment requires a good location and selecting proper management. Investment number 5, this will be the last one, pension funds. Pension funds remain one of the most structured and tax-efficient ways to prepare for retirement. But they benefit from long-term compounding, professional asset management, and regulatory oversight by Retirement Benefits Authority. And in Kenya, many well-managed pension funds have historically delivered long-term returns in the range of between 10% to 12% on an annual basis. And pension investments also benefit from tax advantage, and this makes them extremely valuable for retirement planning in Kenya. So for many retirees, pensions will serve as the core financial foundation of your retirement income. And I always say that apart from pension, apart from having the pension scheme, the one that's provided for you by your employer, always have personal pension plans that will be able to supplement, because what you get from from your employer pension is just to give you the basic necessities after your retirement. So those are the 5 benefits. And to conclude, retiring in 5 years requires a shift in mindset. You no longer have the time, so time is not your ally, and the goal is therefore to maximize, no longer to maximize the risk, but to preserve the capital that you already have. The goal is to build stable system and stable money management structures in place that can support you for decades. And the best portfolio typically combines several investments. Have treasury bonds for stability, money market funds for liquidity, dividend stock for income growth, real estate for monthly cash flow, and pensions for long-term security. When you combine this properly, then these investments can create retirement income systems that continues to work for you long after your salary stops. Because the real goal of retirement is not simply to stop working. It's reaching a stage where your investments are slowly working for you. And without you having a salary, something is paying you on a monthly basis. So those are the 5 investments that you can make during your retirement. And we've also talked about the 4 common investment mistakes that you should avoid when you are nearing your investment. So that is the video for today, and I'll be seeing you in the next video. Thank you for watching. Bye bye for now.